Hi everyone, I'm Ken from Crypto Trading KS. Let's have a look at Bitcoin structural levels. It was a pretty interesting weekend. We managed to get down below that structural support level of around 62,200. It was a little bit weak across the weekend, but it didn't touch the 61,400 level. Instead, it managed to come back and it's actually trading above 62,200. This puts the 64,200 level on the cards. Let's consider the bullish case and the bearish case. At the current time, we can see that if we come down and further consolidate around the 62,200 mark, this would be fairly good news for Bitcoin. We're already making a series of higher lows. If we come back and consolidate further, that will give fuel to momentum to the upside. 64,200 becomes the next key place to look at. However, if we lose this 62,200 level, we would expect a retest and the safety nets to catch us on the way down to 6,800. I would suggest you keep your eye on this structural level around that 62,200. It's really key. We must stay above it to get the bullish case. Falling below it opens up the bearish case. Public companies, ETFs, and governments are all accumulating Bitcoin. We can see that right here. MicroStrategy is dominating the public company state. Look at that. $6 billion in terms of Bitcoin holdings. That may sound pretty good until you get to the ETFs. We can see that Grayscale, iShares, Bitcoin Trust, Fidelity, ARK, Bitwise. Wow, what a lot of holdings we have here. Literally tens of billions of dollars. Across the world, about $107 billion are held by governments. The crypto market is always seeking to draw shorts and longs into the market to get liquidated. We can see around this 63,220 mark. There are a lot of shorts up there. So the institutions could come up, whip those up, and then come down and grab liquidity. Don't forget, Jerome Powell will be speaking soon. Jerome Powell will testify later on this week, but it's sure to move markets as it usually does. So just keep in mind that when the Fed chair, he talks, the markets move, and they can move around quite substantially. Across the weekends, we've seen a lot of liquidations, over $280 million worth, with the majority being long liquidations. That's what pushed Bitcoin's price down. On a 24-hour basis, it's much easier to see. We can see that there's been more short liquidations than long liquidations on Bitcoin and Bitcoin Cash. Over the past 12 hours, it's changed around a bit. And what about the past hour? It's starting to shift. Momentum is starting to change. That currently means the shorts are getting more liquidated than the longs, and that's why prices come up. As we get into the bull market, it's really important that you trade and also invest. You don't want to just be trading and you don't want to just be investing. You want to combine the strengths of both approaches. Why is that? Because timing is the central concept for trading, and time in the market is the central concept for investing. Unfortunately, with investing, people don't tend to time their entries and exits very well. But with trading, we can stay in the market too short a period of time. For example, many months ago, I leaned into Bitcoin and I've been holding it and I haven't sold a thing. But I also have a active trading portfolio with Bitcoin. I'm always getting in and out. It can help to separate two accounts or even more. On some exchanges, you can get sub-accounts. I would recommend that. Personally, with my Bitcoin holding, sort of my hodl bag if you like, I'm actually going to be holding for quite a period of time with that one and just using my timing to understand how the market tops out. As I mentioned in the video, if Bitcoin comes down in price, that will be met by very strong buying demand. Even if the FOMC meeting comes out and Jerome Powell says, oh, we're going to keep interest rates higher for longer, what you will find is that the market will come down with that kind of news. That creates an ultimate buying opportunity. You want to add to your investment portfolio through your timing, through your trading strategies. If you're only investing, you will find that you just enter and exit at the wrong times because you need timing. And if you're only trading, you're not holding for long enough. After all, this is now the bull market, so we want to hold even though it retraces and comes back up. When it comes up, that looks really nice. These returns are terrific. But the concept is we want to get in when it's pulling back, especially pulling back harshly. And Jerome Powell may give us some opportunities. It's critical that you do the timing cheat sheet. You want to be continuously aware of the structural levels inside the S&P 500, the Nasdaq, what's happening with the DXY, Bitcoin, gold, US oil, junk bonds, especially look for them, the US 10-year, the US 2-year, the Forex pairs, and of course all the different cryptos and key stocks. This will form an incredible picture where you can look through the Tier 1 charts, the Tier 2 charts and the Tier 3 charts to understand how market momentum is actually playing out. You must look at these three tiers. They're vital. As the new month has clicked over inside the service, the TradingView indicators for the S&P 500, the DXY, Bitcoin, US 10-year and Solana have been released. Others will be released as quickly as possible. So far this quarter we've seen fantastic returns in Bitcoin and also in Ethereum. Just take note that in Q2 things tend to get a little bit more subdued than Q1. We've seen in the past a big move in the first 3 months followed by literally a bit of consolidation, then some negative price momentum. This is the time that you really want to be trading. So you don't want to just invest and you don't want to just trade. Do both. Just combine the strengths of both approaches. Just like life, price is always moving in a wave. It's going up and then it's coming down and it's going up and coming down. What you want to make sure is that the trend is going in the right direction. This is not just with your trading and investing portfolio, it's with your life as well. Always remember that retracements give you strength. They make you pause, they make you smarter, they make you look into things, and they make you consider that there are other things you might be missing. The markets will retrace. In a bull market, they can retrace 30 to 40%, so please be aware of that. And typically what occurs, and we've seen it in the memes, they'll just come up and up and up, and everybody will say, oh, I missed it, I need to get in, and then they'll retrace, and they can retrace very harshly. And then they say, oh no, I got it wrong, and they sell. This is the problem with investing. The investing mindset is to buy when the prices go up. The trading mindset is to buy when the prices go down. You want to combine these two approaches, understand where the investor attention is, and then just be patient to scale in. What typically happens, as price goes up, everybody comes in, but as it goes down, everybody scatters and they run. You don't want to be like this. This is retail thinking. You want to be institutional. Remember the 10-5-10 fund rule. It can make you rich. Unfortunately, if you're doing the retail way of doing things, it can make you broke, so be really careful what you do. I'd like to thank everybody for their very fantastic comments over the past couple of videos. You're just awesome people. You need a lot of rules inside the market, and Rule 654 is a game changer. SLs or Stanfield levels, they just show us where the institutional buying and selling activity is in a price chart. I showed you that before on Bitcoin. It's also good to be aware that there are two schools of thought when it comes to trading and investing. One school of thought is the retail school of thought. Retail just will sell on the red. Every time the price comes down, they're dumping. And every time the price goes up, they're buying. You can see that this is the death of 1,000 cuts, because you will literally buy on the way up and sell on the way down, and you will do that repeatedly until you blow your account up. The other way of doing it is the opposite way. That's the institutional way. The institutional way is that we buy when it goes red and we sell if we're trading when it goes green. So we're buying here, selling up here, buying here, selling up here. For example, we're not doing the opposite. We're not buying up here and selling down there. But to do institutional thinking, you need institutional tools, as well as the institutional mindset. The retail mindset occurs in Zone 1 and Zone 2, where there's just a high amount of emotion. The market is treated like one big casino, and if you treat the market like a casino, you're going to get burnt because the house always wins. Institutional grade thinking is down inside Zone 3 and Zone 4. In Zone 1 and Zone 2, if things don't go our way, we get angry and hurt. We don't learn from the loss. We don't learn from the lesson. Inside Zone 3 and Zone 4, we go into the insight cycle where we focus on our learning, because the markets are not penalizing us for being people. They're penalizing our lack of knowledge. A lot of losses occur because we don't have positive excellence. Positive excellence is all the good stuff. A lot of people want to become rich because they want inner and outer peace. And the good news is you can have it right now. You can have it today. And the fastest and easiest way to get it is just to be authentic, but be kind in doing your authenticity. If you want to succeed in life, you're going to require determination and confidence, persistence and commitment. That will require that you have a lot of courage, because you'll need to learn. If you're not humble and you're not patient, you'll keep on learning things, but suffering losses because it just won't stick. Humility is really important, because the market will humble you. It will humble you time and time again. Focus on your learning and your humility, and you're going to do incredibly well. It's been a while since we've spoken about positive excellence. What kind of topics would you like me to talk about in coming videos? And this is very much part of the mindset of an institutional player inside markets. I'm really looking forward to your comments. And always remember, we don't want to be like these people that just run away when the prices go down. We want to be buying in these circumstances. That will put you on the right side of the trade, the right side of the percentage, and it will make you very wealthy over time. All you need to do to kickstart that process is be dedicated and committed. Just think to yourself, I either win or learn, and never blame. When we blame, we lose the lesson. We externalize the problem, and it's all about learning in this life. Always remember that opportunities and life reset daily. It doesn't matter what happened in the past. Today is a completely new day. And it's a beautiful thing to know that this universe wants you to succeed. Always seek to solve your problems with positive excellence, and you'll find that life goes so much more easily. Also remember that when you get a life pullback, it will give you strength for the next life rally. It's easy to get confused in life. We often think that we need to be wealthy. We need to be billionaires or trillionaires or something like that. The truth is, you just need to be happy. And the way to do that is to grow your strength at all times. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.